Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're covering how to avoid real estate withholding errors related to sales by trusts. If you're looking for a deep dive into California tax issues, register for Spiedel's 4-hour webinar, Critical California Tax Issues, which covers conformity, property tax transfers, moving an individual or a business out of California, CalSavers, and more. For details, go to Spiedel.com and click Webinars. Buyers of California real estate are required to withhold tax from the proceeds of the sale of California real property by both residents and non-residents of California, and for certain business entities, unless certain exceptions are met. The rate of withholding is 3 1/3% of the gross sales price, unless an election is made to use an alternative rate based on the amount of gain from the sale. Many of the errors we see with real estate withholding relate to sales by trusts. If the property is sold by a grantor trust and the grantor is still alive, the withholding agent should enter the name and the Social Security number or ITIN of the grantor, and not the name of the grantor trust or the trustee information. The grantor will report the income from the sale and claim the withholding on the grantor's individual income tax return. If the grantor died prior to the sale, then the grantor trust becomes an irrevocable trust, and the non-grantor trust reporting requirements apply. The withholding agent should not enter the decedent's or trustee's name or Social Security number in Part 2 of Form 593. The trust's name and FEIN should be entered in Part 2 of Form 593. If the non-grantor trust has not applied for an FEIN, leave the identification number blank. Do not enter the trustee information. When the non-grantor trust receives their FEIN, you should provide the FTB with the number by contacting the FTB's Withholding Services and Compliance Unit. If the trust distributes the income from the sale to the beneficiaries, the trust also has to pass through the withholding to the beneficiaries. To do this, the trust files FTB Form 592 and provides the beneficiaries with FTB Form 592B. If these forms are not filed, then the FTB will only apply the withholding credit to the trust and not to the beneficiaries. In this case, any withholding credit claimed on the beneficiaries' returns will be disallowed. To transfer the withholding to the beneficiaries on Form 592, the trust will list itself as the withholding agent in Part 1 of Form 592, check Box B, Trust Distributions, in Part 2, list the total amount withheld on the sale proceeds on Part 3, Line 1, Total Tax Withheld from Schedule of Payees, list the total amount withheld by the trust on Part 3, Line 5. This should be the same amount listed on Part 3, Line 1. And allocate the withheld amounts among the beneficiaries by listing the beneficiaries as the payees on the Form 592 Schedule of Payees. The withholding is not directly reported on the California Schedule K-1, but tax professionals should provide a statement detailing the withholding and attach a copy of Form 592B to the beneficiary's K-1. Get updated on everything that happened during the year and be prepared for tax season with Spiedel's Federal and California Tax Update. Live seminar and webinar options are available, and you can learn more at Spiedel.com. That's all for this week. Join us next time for another episode of Spiedel's California Minute.